All right, we are live here. This is going to be week 2, I would say, within the market analysis because last week was week 1 in March. Now we have week 2 for the March analysis. So as we can see here, futures are up. They're up about 0.3% on SPY right now. We had a good gap up to about 386, 3865. Came back down, filled the gap all the way down, and that is where our new support rests. So as we can see, this is what I mean by filling the gap back down. We have this gap up, and then we came back down and filled the gap all the way back down over here. Now we are slowly making our way back up. What I would like to see from futures here on SPY is to cross back over the 386 level. If we can cross back over the 386 level, make this place a new support, that is what I'd like to see. You never know. By the end of this, we could see that. This is on the 1 minute time frame. So we'll see how everything shakes out. So this is the SPY overview for right now as far as futures. We're going to go take a look at what happened last week on the hourly. So as we can see here on the hourly, it was somewhat of a shaky week that we had. So starting on March 1st, we did have a nice gap up. We touched, the 390 area, came back down, could not hold, consolidated a bit, and then it was just straight sell-off. We had a couple of hours that were really, really red. I thought we were going to see a nice little pivot up, but on the 4th, it was a major red day that got filled back up with some green volume, which was good. We came back down, dojied off of some long-term support, dojied again off of long-term support on Friday. From Friday, about 9 a.m. my time until close, we were just green. It was a beautiful sight to see. It was a great recovery. Now we're somewhat holding this 384 level that we've called home, and we need to see it push back up. I'd like to get us back over that 386 like what I was talking about. This purple line over here represents that. We have our lines in right here. But as we see, I want to see it get back over this purple area right at 386. Above 386, we can push 3875, and then above that, we can go all the way to 391. Who knows what stimulus is going to do this week? We're kind of shaky. We're kind of not. We can go take a look at the Nasdaq and see right here that everything has really not held too well on the Nasdaq futures. We are negative, I believe. So from open today, we can see here that let's see where's open today. So open was over here. We gapped up pretty big, right? We gapped up pretty nice. Now we're coming back down, filled the gap all the way down, went negative red. Now we're coming back up again and we're holding. We need to hold this area. This is on the brink of being negative positive, and we need to hold to make sure that to make sure that we can actually see this push up. Nasdaq has been the one lagging. We did see good moves last week. We'll go take a look at the hourly from last week, and as you can see here, we have that doji, we have that nice hammer, whatever you would like to call it, into the close. Now we're sort of resting in this cup. I'd like to see us consolidate, push above the 12,710 level to push up to that 1293. We have a major gap that we can fill up from the sell-off that we had, so I'd love to see that for this week. Those are the two overviews that I'm going to give as far as SPY and Nasdaq. We will come back to these at the end of this video and just do a little recap. But as of right now, we're going to go into the sectors. So the U.S. stock performance sector last week on Friday was up mighty green. So we had energy that boosted up. I don't know if you guys remember the previous week where energy was down, and I thought that we could see a nice little revision there. We did heading into Friday. Energy looked great. If we click on energy here, as we can see, we will take a look at the 5-day. We did have that down day on the 4th. But overall, we had a nice move up compared to the S&P index. So I would like to see this continue. It went up 10%. So let's see this continue into this next week and go from there. Heading back to this area, that was one of our major gainers was energy. One of our laggers still is going to be this consumer discretionary that has auto components, automobiles, hotels and leisure. That type of area. The main thing that held us back was the diversified consumer services. This one, just didn't do what we thought it was going to do. It doesn't have that big of a cap here or enterprise value, so it's not that big. That's what's been holding this section back. I'm not too worried about the consumer discretionary. IT, it's not too bad here. Communications equipment, IT services, this one moved up very well. Real estate still is lagging a bit behind. This could be a good one for dip buy opportunities if we see it, such as real estate dividends as well as high-end ETFs, that type of area. I'm always looking into the real estate area for that type. Communication services such as entertainment, interactive media, and then wireless telecommunication services really carried this. This has a $437 billion market cap, and it did really well this last week. We saw that nice, those double bottom here that we have on this chart, and it moved up. I'd love to see this continue. So let's see these this grind continue through this week. I'm hoping with stimulus that's what we get, but you never know. So I'm now going to go into the sectors and industries and the weighting recommendations. So these have been certified as far as on the 1st of March. Now we can actually get a good look at what we're going to see here. So of course IT is going to be holding the most at 27%. It says it's market weight. Argus Research says it's overweight. Most people disagree with that, so I'm going to say it's market weight right now. I'm thinking we're holding steady. Information technology did get a boost last week, but overall, I still think that it has more room to move. Consumer discretionary, they say it's overweight. I disagree with that. I do think it's a little underweight, as we've seen on the previous charts. Same with market weight. I do think it's a little bit more market weight than it is overweight. Another one that I would like to point out is energy. I do think energy is a bit overweight. Now, that's just me personally. I could be seeing a bull run here before the bull run has started, but I do think it's a bit overweight. Same with materials. Argus Research says it's underweight. I don't really agree with that. We can take a look here, and it says it's market weight in the energy sector just because it represents 2.6% of the S&P, so it is moving a bit there. As far as that goes, we have the underweight and underweight with utilities and real estate. So I do agree with these. I do not agree with the Argus that utilities is overweight, but I do agree here real estate is underweight by far. I do, in fact, believe that's due to the interest rates that we have going on. But overall, right now, I'm definitely going to be watching information technology. I'm going to be watching healthcare, and then I'm also going to be watching financials. I think banks can make a good run here. They say overweight. I'm considering it more market weight. And as far as that goes, I do believe that real estate and this area are going to be our strongest ones this week coming up. So now that we have those, we are going to go take a look at the sector performance as far as, sectors and industries that we have. So industries last change, wireless communication, we went over that 5%, but we're going to go over here to this 1 year percentage change. Metals and mining is up 66%. That is one that has a $1 trillion market cap, and I do believe that this can continue to push. We're going to go from high to low here. Auto components are up as well, 70%. Air freight and logistics is up 69%. Then we have that metals and mining. So as we see here, this $1 trillion market cap are the big ones to get into. Internet and direct marketing retail. This one is a kind of a sleeper here, but it's got 51%, and the market cap is major, so I do want to keep an eye on this internet and direct marketing retail. I do believe that we can see it grow. It is coming down a bit as far as the S&P index is concerned as well. We do get those spikes, but when the spikes commence in the S&P, that's when we see this move up major. So keep this on your list as far as an industry to watch. Now we are going to go back to sectors here. We're back to sectors. So as we can see, the 1 year change, utilities and real estate are both down, which is to be given. Consumer staples are still down. They're only up about 1.7%. So keep those on your radar. And then for continuation, information technology and materials, and then communication services. So now that we have that out of the way, we're going to look at the market sectors and news. Tech stocks. This caught my eye because tech stocks, they're on the decline, such as Apple, AMD, Nvidia, those big ones, Microsoft. I do expect the money to flow back into tech stocks once they come down a little bit more. Who knows where they could level out at? As far as we know with Apple and Nvidia, Apple can push back down. If it wants to, Nvidia, AMD, they can all push back down. We hope not to see that, but money is transferring to value stocks such as AT&T, Verizon, Coca-Cola, those stocks that are good over time. This is why we see the bond yields going up. And I want to explain here, I've seen a lot of talk about bond yields rising and then stocks going down. Here's a great reason why. So bonds affect the stock market by competing with stocks for investors' dollars. But bonds are technically safer than stocks. That's why you're seeing the bond yield go up, is because people are pulling out of stocks, which in turn sinks the market, and then bond yields go up. So it's just a matter of supply and demand on what we're seeing. So whenever the bond yields go up, that's not what you like to see. So keep that in mind. Now, we're going to go back to the news that we saw over the weekend. We're going to transition out of the sectors and industries, and we're going to go directly into the news that we saw over the weekend, such as the big stimulus news. So, the new stimulus bill, the top Democrats plan to fast track the nearly $2 trillion stimulus package. So this could hit the president's desk this week. Now, what does that mean for us traders? Well, $1,400 is going to be going out to most Americans that qualify for it, as well as revising the income limits. It's going to be a third stimulus payment. Some people won't qualify for it, but there's going to be new unemployment benefits, child tax credits, and then COVID-19 vaccine distributions have been unchanged. The federal minimum wage to 15 was ousted to pass through the bill. So that isn't a part of it. So what we're seeing purely here is that we're going to have more unemployment benefits, tax benefits for children, and then the $1,400 stimulus. So a lot of people, when they get these stimulus checks, they like to put it into the market right away. So we could see that nice bump up. Let's hopefully continue that. They are saying that checks could be given out this month, so let's see where that plays into it. Something interesting that I saw off of Reuters News was the bond yield. So I was looking at this, and yet the yields on the U.S. 10-year treasuries still hit a one-year high of 1.625%. So this could be why our futures aren't up as much as I thought they would be. So in wake of the data, and stood at 1.6 on Monday in the Chinese markets, or I believe it's the Hong Kong markets is what it is. So they increased a hefty 16 basis points for the week, but the German yields actually dipped. So we're getting that increase and decrease. So nothing is set in stone. Tomorrow is definitely going to be a better place to look at this as far as that goes. So we've now gone over, the futures. We've gone over the sectors and industries. We've gone over the news that hit over the weekend, which was big. Now we're going to jump into some earnings plays this week. So we have our most anticipated earnings for the week of March 8th. According to Earnings Whispers, shout them out. They've got a great platform. Some of my most favorite ones that I'm going to be looking at, there's really nothing on Monday that I see that's going to be big. However, I do see later in the week we do have Cloudera, CLDR. I am in that one long term. Oracle is another big one. Skills is a big one. So these three are big for me. Then on Thursday we have JD, DocuSign, Microvision. This is a penny stock, but I do like it for the Thursday after close. I also like Funko. That could be another big one that comes into play. And then Friday before open, I really don't see too much here. But these are my big ones for the week. A lot of people are probably going to be watching AMC, so be careful of that on Wednesday. Overall, that is what I see for this week. There's not too crazy of earnings. JD, DocuSign, NBIS, like I said, are big ones. A lot of people like to play Ulta. I know Ulta can be a good one, so that's after close. You might see that ramp up Wednesday afternoon into the Thursday morning, so that could be a good one. There's a lot of fun ones to watch this week. We don't have any major big ones such as Apple, Microsoft, Tesla, yada, 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 but that is something to watch this week. Now to dive into the U.S. economic events and analysis. So this week we do not have too much going on. We do have wholesale inventories, which is a consensus on 10 a.m., which really isn't that much. We do have our CPIs as well as the petroleum status report on Wednesday. These are two big ones. Those ones do market move and present those market moving indicators, so we need to keep an eye on that. Thursday, we have jobless claims as always. That is going to be a big one for that deciding factor. And then Friday, we have that PPI final demand. So let's play into that. Let's see where this takes us. This week, we don't have too much news other than the stimulus. So that's what we're going to be watching this week. Now we will head back to our futures and wrap it up here and go from there. So our futures right now on the hourly, we have a gap up as we see. It did fill the gap down. We have this nice bullish hammer that we have. So let's see this push up high out of 386, get about 10 more about $1 more on SPY, but $10 more on the ES1, and let's move from there. NQ1, the Nasdaq futures on the hourly, it looks all right. It's just kind of consolidating. It's not too great. It's not too poor. We're just sitting about even. On the 5-minute, we're starting to curl back up again. We did hit this red, but I'd like to see this get back over that 12,742 and then to push higher. So those are going to be my levels for this week. This video is going to be posted on our YouTube Stock VIP. Overall, I hope you guys enjoyed. Let me know if you have any questions, and make sure to check out our Discord if you are not already in it. I do this every Sunday, and then I also do free technical analysis on Saturdays. So be sure to subscribe. Let me know what you'd like to see, and we will be seeing you guys later. Have a good one.